Hi everyone. This is a very experimental one-take video for a private channel. So I'm just going to try to record, as they say, a quick overview without any special editing, upload it to YouTube without an intro or outro. Just record it, upload it, and that's it for the private channel. Perhaps if everything truly works out quickly and efficiently, if I genuinely enjoy the process and find it fulfilling, if a significant number of these crucial ifs are indeed met and satisfied, then it's quite possible that we will consider doing this on a consistent and regular basis going forward. But let's give it a try. This isn't a review of large monitors, we're not canceling that, it will happen, but for now it will be, well, in audio format. Or maybe we'll just switch to me providing, a picture. You'll have a bunch of graphs, and I'll be able to see my big monitor setup with all the tools on a separate screen, and I'll be narrating what's what and how it works. And on these particular graphs, the ones that are right in front of you right now, you'll be able to clearly see, observe and fully comprehend what is being presented. I just think we probably need to turn off the camera, and we'll do that now so it doesn't cover up the charts. You'll be able to see what I'm talking about, at least in terms of where each moving average is, or where there's overbought conditions. Maybe we'll switch to an overview of the big monitors, turn it into a video format. And maybe we'll combine both Ethereum and Bitcoin right away because, well, here we're looking at Ethereum. At Bitcoin, right, we switched and now we have Ethereum. That's how it is. All right, for now this isn't an overview of big monitors. For now it's just the current situation and I'll be looking at it starting from the hourly candles. I won't be looking at the 5 or 15-minute ones. Well, that's a bit too granular, let's put it that way. We're big guys in every sense of the word. So let's first take a look at, the monthly candles. I want to emphasize, right now I'm sitting here in a t-shirt and underwear. So, this is just like for my own people. We're just gathered here in a little circle. I just felt like putting something together quickly today. Maybe I even dragged out the introduction a bit too much. Just so you understand, this isn't some kind of special preparation or an ultra super attempt to show off or some kind of super professional level, at least in terms of visuals. I'm just curious to see what comes out of this. This idea just came to me today, so I'm recording this video. Alright, probably dragged it out, but it doesn't matter. Everything that's done is done for a reason, right? And what is that reason? We'll see at the end. The paths of life. So monthly candles. You can see that on the monthly candles we have an overheat, right? But at the same time, the previous month again suggests a continuation of the highs being updated and further growth. At the same time, there is a target for a decline. Here it is, a strong one, around 76,000, so you need to be careful. And if we look at the PP indicator, we can see that we have a very clear divergence here, and it's a double one. And we have the same thing on the RSI, but that's just a sign of a potential divergence. Ultimately, we can confirm a divergence only when we get a bearish engulfing pattern. Look here, we had an engulfing pattern here. We can state that this peak was formed. There was an engulfing pattern here. The peak was formed. Yes, it didn't develop very deeply. It ran into some kind of trend line. Let's expand this chart to full screen. So, this trend line here, which connects, well, it's actually clear what it connects. Here's one high, here's a second high, and here the wicks touched it. And so, we tested it there. I didn't set the highs too close together because then the line would be angled too steeply upward. And here, after some time had passed, the first historical high was formed, and then the second one, 69. So by the way, or maybe not 69, but 70 or 74. By the way, that's what's good about these videos and about Vasya and the channel, both the public and private ones. The fact that I explain everything in great detail and actually provide a method of analysis, right? So you can learn from this. If you don't praise yourself, who will? Well, why not praise yourself if you're really doing quality work? So I explained why the trend line is drawn this way and not along these neighboring peaks, right? And look, we hit this trend line exactly, and in fact, we tested it. This upward movement could continue for quite a long way, right? So, getting back to divergence, it simply indicates that there are risks of a reversal here, but they haven't yet formed into a final structure. Oh, I really like what we're looking at right now. Well, it's just that here I can show you things more clearly and explain them in more detail, go deeper and all that, because after all, you're paying for my work and I really appreciate that. That's why I try to provide you with as much quality content as possible. So, now let's keep going. Actually, not content, that's not the right word. Analysis, that's the right word. Look, on the 12-hour candles, on the daily ones. Wait, we haven't looked at the weekly chart yet. On the weekly chart, our PP trend is pointing downward. We have a bearish engulfing, a reversal, and there are risks of a decline. And if we open up this chart, it's very clear where these risks are headed. They're not explicitly marked here, but you can clearly identify them as one of two distinct levels. Which specific one, I honestly don't know. However, the first level is probably this particular one, right? We just need to turn on the magnet tool. Look, here it is, the level at 108,353. This is the level that came after a major rally, then a pullback, a correction. Then we tested this level, then there was a false breakout, bounced off it, another false breakout, and another one. Well, not a false breakout, that's just a test. A false breakout is when, like here, we closed above and then ended up going down. That's what's called a breakout, right? And when we were just wicking above and below, that's not a false breakout, that's just testing, yeah? Because you always have to wait for the candle to close. Again, here's another concept for you. How to analyze, how to look at the chart, what to pay attention to. So, accordingly, this is probably the most important one, 108,353. When I talk about other types of analysis, when we look at things from different angles and say that 109,000 is showing up for us, well, here you go, 109. We might also see another level. Maybe it's already, so to speak, played its role and shown itself. This level right here. Take a look, 111,980. Exactly. We touched this level perfectly with the shadow, right? However, the specific price point of 108,353, precisely because of the formation of this particular candle, is widely perceived as a strong indicator of a potential continuation of the current trend. Whether this anticipated continuation will indeed materialize or not, ultimately only time will tell, as it remains uncertain. Nevertheless, it aligns remarkably well with the established principles of technical analysis and the inherent structure of the magnet level, providing a compelling case for its significance. And if we get here, we might even reach the bottom of this trading range. It's better to look at it on daily candles, but we can already mark it as this level. That's already $105,000, 104,400. Look, here with the wicks, they kept hitting it. There was a false breakout, and then we shot up, right? So I would mark this range from the perspective of weekly candles as a target zone. And the fact that we bounced off the 111,980 level on the first touch, that's normal, that's to be expected. So where does it make sense to consider shorts from? Well, first of all, based on the bodies of these candles, that's around 117,200, 117,300. And just visually, the middle of the candle is 116,800. So, after rising up there, most likely there will be a short, then we'll go down, correct a bit, and then we'll see what happens next. Maybe we'll get, on the weekly candles, on the monthly candles, a monthly scale engulfing, and then we'll have to forget about longs altogether. But it could happen that this scenario doesn't play out, they'll take us to a new high, and then we'll go down from there. So it's not a given, but the priority according to the weekly candles is still down, to the area of 108,353 to 104,463. By the way, I actually want to brag a little to you. Well, there aren't many people I can tell this to because I don't really want to make it public, but on the other hand, I do want to share it with someone. Right now, I'm buying a huge amount of very expensive equipment. It's, an insanely expensive camera, an expensive lens. It's, memory storage, video cards, motherboards, processors. Well, just one of each, but they're all top of the line, powerful, so I can process video at a high quality without any lags during recording, streaming, and so on. It's, additional equipment of all kinds for streaming, for working on the computer. So this is equipment related to sound, lighting, so I can shoot reports, film outdoors. So each of these things, right? For example, I bought, well, it hasn't arrived yet, I paid for it yesterday, the best capture card out there, right? I need to figure out how to use it. I also bought an Elgato Stream Deck. If you know what it is, great. If not, look it up online. It's for optimizing workflow, and that's another separate gadget that also takes a long time to figure out with all the settings and so on. At the same time, I forbade myself, well, not exactly forbade, I just realized there's no point, in watching all sorts of news, interesting YouTube videos, and other nonsense. Right now, I've truly focused on, for example, when I'm enjoying a relaxing cup of tea or have a precious free minute to myself instead of passively watching the daily news, whether it's about the ongoing situations in Ukraine, Russia, or, I don't know, even something like Animal World, I actively choose to open up the various functions or helpful tips for Adobe Premiere for professional video editing, or explore the intricate settings for OBS Studio, or meticulously configure the Elgato Stream Deck, and so on and so forth, delving deeper into these valuable tools. Not the Panthers. So that every single day brings me some kind of meaningful productivity, so that I can learn a little bit more about different effects or various features, so I can effectively do my work much better and more efficiently. And at the same time, there are a huge number of things that are just written down in my plans. I have a separate place where I write all this down. I jot down video scripts, TikTok ideas, plans for the Where's the Money Vasya channel that I want to revive, and indicators I want to create. But there are only 24 hours in a day, and you just can't manage to do it all. But I will definitely get it done because what's written down usually gets accomplished over time. It's like some kind of magic. But my life experience tells me that if you write your plan down on paper, yeah, then it will come true. A few years later, you look back and think, damn, everything really did come true, everything. Alright, let's move on to the daily candles. On the daily chart, look, we have a few things to note. I won't expand it to full screen anymore. First, there's a growth target around $116,000. Second, we have this blue curve here, which was broken downward, indicating a downtrend. But we might encounter it again, test it, and then continue moving down based on what we see on the weekly candles. As for the RR dynamics, you can see here that it's pointing upward. So basically this supports growth here. And here on August 3rd, we got a good reversal candle. Well, this also supports growth somewhere around 116, 117. Basically up until we meet this blue curve. Take a look at the 12-hour charts. The RR dynamics are clearly upward. There's one mathematical target for growth and another one as well. So this also seems to favor the upside. Now let's look at the 4-hour chart. Look, we've hit the 50-period moving average. We had like 2 growth targets. Both have been reached. Those were strong targets, but there's still a weak target left, right? The RR dynamics, however, are pointing downward. And it suggests that there could be a correction, possibly down to the base of this candle, which, in fact, we've almost done today. So, look, we came very close to its base, to the starting point of this move. We got the highest close in a while, and now we're only being held back by the moving averages. And potentially this could be a move to around 116,500. By the way, I was about to turn off the camera, someone rang my doorbell and I got distracted. But let me turn it off now so it doesn't get in the way. Although honestly, there's not much to look at here anyway. So it seems like we've had a decent correction and now we should be heading up. But the key point is all these moving averages, right? And notice, the very top one is at 116,700, or around 117. So the growth could end right here. And the weekly candles suggest that the probability of this is high. And well, here the blue curve will meet the price, and that's when we'll have the moment of truth. Either we keep heading further down, or... And finally, the hourly candles. What do we see on the hourly chart? There was a downside target, it has been reached, we retested after the breakout. There are 2 moving averages, the 50 and the 100. And now we're probably moving towards the area of 115,000 to the 200-day moving average. If we break through it, then the next one is the 300-day moving average, which is also around 116,000. So the momentum is moving from the very bottom upwards. In other words, no matter how you look at it, it's like a locomotive. So everything seems to be going well. Let's take a look at the retracement levels. As for the retracement levels, well, I change them from time to time for myself, you know? So like this, like this, like this. So we have 115,000 on the 15-minute chart. Here we also have 115,000. Well, that matches the targets on the hourly chart. But pay attention to how many downside targets there are. 110, for example. That's a magnet level. There you go. Well, 101.95, that's already the monthly time frame pointing to a decline into that area. But apparently, it's still too early, though we'll most likely get there eventually. So these levels play out over the long run, as you can see for yourself. I'll finish coding this indicator so I don't have to manually place these blue lines. They'll appear and disappear automatically depending on whether the level has played out. Right. And not only that, I've even come up with something else. Well, in short, it's another feature I'll implement soon. So, as for the Bitcoin retracement level, that's all clear here. But when it comes to the retracement level for, say, Ethereum or some other altcoin, there will be a line drawn here, and at the end of that line, the Bitcoin price corresponding to that retracement level will be displayed. What does that mean? It means, let's say Bitcoin is currently at 100,000, and the price of some altcoin is $2. And now the retracement level is at $3, which means a 1.5 times increase. This means that if the altcoin grows by 1.5 times, and Bitcoin also grows by 1.5 times, though I'm using very large numbers here, obviously it's hard to imagine both of them increasing by 1.5 times at the same time since alts are more volatile, but if we see that the alt should rise from $2 to $3, then opposite the retracement level of $3, the price of Bitcoin will be 150,000, right? Because the current price is 100. A 1.5 times increase in the altcoin implies a 1.5 times increase in Bitcoin. So, Bitcoin will rise from 100,000 to 150,000. This will be very convenient because we look at the retracement level, say for TON, and we can already estimate what the price of Bitcoin might be at that point. Well, you have to admit, it's a cool idea, but it needs to be implemented. Again, all of this takes time. I just enjoy both my ideas and the partial realization of some of them and the whole movement that's happening. There's also another really cool thing planned with CoinFury. Lev Mazur made me, let's say, a very interesting offer there. I'm really inspired by it, and I also hope there will be a separate direction for development there as well. Alright, let's get back on track. So, we see 117, and there's a 200 level on the hourly chart, 117, 800 on the 4-hour chart, but the moving averages are holding us back. But look, if we really wanted to fall, then after we dropped and tested the 200 here, right, we should have continued falling towards the 110,000 area, where there's also a return level. But for some reason we came back. Maybe it's not time to fall yet, maybe we still want to test the 100, maybe we want to go to 118, who the hell knows. But we'll see. In any case, the potential for a return, where we might come back to, and it still wouldn't be a final reversal upward, is this flat zone here. Its upper, well, the lower boundary is $117,300. So, if we break through this zone and close here, then look. First, we break the trend line, and second, we break through the lower boundary of the zone and return to it. In that case, we can interpret this as a false breakout, right? That is, everyone was made to believe that the market had reversed and was going down to, say, 110, 100,000, 90,000, but in reality, we're heading for a new all-time high and it could be significant. So if you're short, make sure to set stop losses. Well, and in fact, the same applies to those who are long. Now let's take a look at the weekly candles. So what do we see on the weekly candles? Well, let's flip them over. Well, we've marked some levels here as well. Here it is, 108,353, I've marked it. Here's another one, something like 93,700, which is the bottom of some reversal zone. They kept hitting it and couldn't break through. And we could also return to it. Overall, the situation here is bearish. Well, it's bearish no matter how you look at it. But this bearish situation allows for a return even to the upper level of this red candle from last week. That's about $119,500. Here, it's important where the daily candles will close and what kind of engulfing patterns will appear, but we need to be very clear that the risks are high. Now let's go back and switch to TON. So the situation here is also quite interesting. Take a look. Well, let's look at the daily candles right away. So here we see a decline, the price drops down to this zone from which the growth started, right? Meaning the base of the rise. Accordingly, some people might have had their stop losses below these lows. We've made a minimal retracement of this red candle from July 28th, and there's a chance that TON is now starting to rise. But for growth, we still need, let's put it this way, a breakout above these two levels, 3.34 and the 200-day moving average. If we consolidate above this level again, and even engulf this red candle, then at that point, you can say it's either all over, or on the contrary, we're heading for 410, 438, and maybe even, well, this level from which the drop started, 4.62. There's a high probability we'll see it, or at least 4.10 and 4.40. Well, the probability is very high, right? But it's too early to talk about that for now. At the same time, notice that we even have some kind of intermediate level at 345, which is basically attracting the price. It's too soon to rush things, too soon to start celebrating. Why? Because in reality, we've just broken through the 200-day moving average, and now we could test it from above and then head towards the 50-day or the 100-day, somewhere around 3.08 to 310. I've mentioned this to you before. And we could even go lower, down to the bottom of the trading range, meaning here, 280, 290, or even down to 252. But that's no longer within the trading range. Our trading range is at least limited to around here. Well, there's also the 2.67 level, which is our 4-hour return level on TON. And these are risks that should be taken into account. So keep in mind that this current upward movement could end with a sharp decline. But here, almost everything will likely depend on Bitcoin. But at the moment, it still leans a bit more in favor of growth. Let's take a look at Ethereum. So right here, yeah? Regarding Ethereum. Well, for Ethereum on the monthly candles, the growth just keeps going, and once again, it continues with you. And the heart is anxious on the journey. Lenin is so young and youthful, October lies ahead. That was a song from my childhood. So look, a full green candle with a proper upper wick. In other words, we didn't close without a wick. This suggests that a new high is likely to be reached. Most likely, the RSI trend is pointing upwards. This means that, most likely, Ethereum will set a new high, well, break through $4,000 or at least test it. Here, it shows a very strong overbought condition. Take a look, but that's not a guarantee of a drop, though it is present. And the target for a decline, or rather, it's not a target for a decline, it was an untraded level. We returned to it, not completely, but we did come back. Ah, well, that's basically it. So, there are some pretty serious downside risks here. Moreover, take a look. This indicator here has reached the zero zone. This indicates, well, that there are high risks of a decline. So this kind of combination, this kind of break, when we return to 0 from 1, points toward a decline. But let's look at the daily chart. On the daily chart, we might test this blue curve here. That's 3,790. We haven't reached it yet. The RP dynamics are upward. On the 12-hour chart, we've broken through the blue curve. We have a growth target around 3,872. On the 4-hour candles, the RP dynamics are upward, and it looks like we're breaking through all the moving averages. At least, that's how it appears 30 minutes before the close of the 4-hour candle. But here, it's not enough just to break through. It's highly desirable to update the previous high, because this one is potentially a reversal. Well, it's not a great candle. It isn't exactly a strong reversal, but it does indicate and signal the risk of a decline. Nevertheless, for now, the bias is still more to the upside here. And on the hourly candles, here too it's upward, the RP dynamics are up, and the moving averages have been broken to the upside. And this red candle with a high of 3,716 acts as the resistance level. Right now it's at 3,703, but something tells me we might go a bit higher. That's the situation. I hope you enjoy this kind of content. We could also take a look at the Kingfisher data, but I didn't prepare it, so I don't have it on my screen right now. Maybe next time. Like the video and leave your comments. I'd be interested to read them. No one else will see them except me because the video will only be available by link. Well, that's about it. Take care, everyone. Love you all. Hugs and kisses. See you next time.